right on. So the main thing that I wanted to do, the purpose of putting together this meeting today was really to go over my current and ever evolving understanding of what we're going to be able to do about 280E. And fortunately, the how I feel about it continues to get more positive in terms of our ability to mitigate the impact of 280E. And so what I want to do is first go over the two camps, the two methodologies that seem to be being entertained by a different, some accountants are like definitely one way and then other accountants are definitely the other. I don't know exactly why they haven't kind of met in the middle, but I definitely see that there's positives in both. I understand both, and I realize that there is benefits to doing it both ways. And so I want to go over the pros and cons of that. And then we'll spend a little bit of time on this idea of having separate business entities. And then I want to go over what would be required to do that, to maintain that, what I'm calling the compliance spectrum, or the spectrum of compliance. And if that doesn't seem to fit your, or the business owner's abilities to stay on that spectrum, then maybe defaulting to a more simple structure would be better, in which case there are tools for working with that business model. And then after that, I would say let's just have an open discussion. So I'll start with one methodology that's been going around that is being recommended is this kind of like keep it simple, where everything stays under one C corporation, and we elect to use an inventory methodology called 471C, in which you can capture otherwise disallowed deductions that, yeah, exactly, what would otherwise be disallowed. And it's the 471C approach. And I understand that approach, and I know why it would work. And the reason why it works is because
Leslie does not think it would work.
The reason why it would work is because the IRS assumes that all activities in a trafficking business is trafficking. If a facilitator is not present, then no psilocybin would be being sold. And taking that under, and that is that's the angle the IRS is going to come into a business. If they do, they're going to come in and be like, all of this is trafficking, whether it looks like service or not, it's all trafficking. And I apologize, I'm kind of skipping. This is like 280E 201 or 301 right now, so I'm skipping the whole like, what is 280E and what can and cannot deduct? I'm assuming that by now, many of you who have been visiting doing these webinars understand what we're talking about. And I'm talking about like what the IRS's perspective is. Their perspective is that if there's any kind of trafficking going on at all, then it's all pretty much everything is trafficking, and therefore it's completely subject to 280E and all expenses are disallowed, which is not acceptable. You won't be able to be in business very long if that happens. So you do need to take some sort of methodology. And there's right now two ways being pushed. One of them is to keep it simple under, say, one C corporation where everything is being done under that one business umbrella. And the idea is that we can take a 471C approach, which is to essentially take all of the activities of the business and consider it activities of being costs of goods sold, or the activities that go into the cost of goods sold. Now, if the IRS comes into a business and says that facilitating is drug trafficking, then what they're actually saying then is facilitating is selling psilocybin. And if they say that facilitating is selling psilocybin, then that can be included in inventory under 471. Does that make sense? Because 471 is an inventory calculation. It is the rules guiding what we can consider inventory. And it actually originally was a penalty on manufacturing. This is how 471 got started. It was a penalty on manufacturing because the IRS didn't want manufacturers to be able to take their deductions immediately. And instead wanted it to be, they wanted them to take their overhead, allocate it somehow to inventoriable activities, and then carry it forward to be deducted against income later on so that they couldn't immediately take their deductions. And so the cannabis industry, early on, when we were trying to figure out what to do, especially around dispensaries and
Sorry,
other
Justin.
businesses in the cannabis industry. Jesse, let me finish, and then we
Go ahead.
can talk. Yeah, and so it was so the cannabis industry early on decided that we were going to use 471, but we were going to use it in our favor. We were going to take manufacturing related activities or processing activities and capitalize them to inventoriable, to inventory, and then deduct them against sales. So we've been successfully able to do that. Then comes the jobs, the Tax Cuts and Jobs Act in 2018, and they even expanded those liberties into 471C. So 471C superseded anything that came before it. And what 471C allows you to do is to capitalize to inventory expenses based on your books and records. So if I say that because facilitating is drug trafficking, then that is an expense that I can legally allocate to inventory and then take against income. And it's not weird. It won't be too weird. And the reason why is because the amount of action, because that calculation is based on the amount of psilocybin you might have on hand at the end of the year, which is probably very little. Like you're not like keeping large stores of psilocybin on hand probably at any one time. But what you do is you take the total amount of psilocybin that you purchase throughout the year, you prorate it against what you have at the end of the year, and you come up with a percentage. And then you take that percentage and you multiply it against all of your other expenses that you deem cost of goods sold, including facility costs, facilitator costs, all of those things, and then you give inventory and allocation, which then allows you to take all those expenses and jam them into cost of goods sold. That is one approach. That's the simple, keep it simple approach. And why it's simple for you is because you don't have to bifurcate anything. It's all selling psilocybin, and then the accountants at the end of the year come up with the calculation. And in my opinion, it's very defensible, but we don't know that. And it could go to tax court, and they can come up with a slew of reasons why it isn't defensible. And then we could be in trouble. And because we put it all under one business, it could be pretty bloody. You know, it could be messy. Those are the cons. But the pro is that you could potentially keep it pretty simple. So then and the reason why that might be a problem for the keep it simple method is because the IRS could come in and say, like, you're doing other things besides the facilitating. Maybe you are doing other things like yoga or meditation or other things that have value added. Maybe you're doing like kind of a like a rec room where people hang out and they're microdosing or whatever, and there's some hanging out, or there is a retreat, or any of these things, the IRS could say, well, a retreat is definitely not selling psilocybin, and therefore you trying to put retreat expenses into your cost of goods sold is ludicrous, and that's not going to work. And if they do, and if you do have it all under one roof, and they decide that any part of that is not deductible, they could just be like, we're not giving you any of that stuff. There is this idea of like the CHAMPS model where there was caregiving activity going on in and I think we discussed CHAMPS before, but let's see here, California is helping, I can't remember it again, helping patients using cannabis. And they were able to win, they were able to segregate their income between, they were able to be the caregiving that they were doing and the marijuana that they were selling, and they were able to win the deductions based on what they were selling, but then they weren't able to win their deductions that they allocated to the cannabis. And so that's the keep it simple. That's the kind of pros and cons, and it sounds very complicated, but what I think the gist that I'm trying to get across here is that it is a way that you could roll if you don't want to do the method that I'm about to propose next, the bifurcation into separate business entities. You could keep it all under one, and we could do a pretty good job defending the position, I think, as accountants using that 471C, but it does not quite fit the narrative that that cannabis does. So the narrative that we might use with cannabis is that this is all in the service of selling cannabis, and it really is, right? When you go to a dispensary, that's all you're doing. You're selling weed, and that's everything is for that fact. But for psilocybin, it's different. It really isn't all about selling weed now, or psilocybin. The IRS might come in and say it is all about selling psilocybin, but they might like throw us a curveball and say, well, actually, most of what you're doing isn't, depending on what fits their what fits their what they want to see at the end of it. So for that reason, I think that the approach that you probably should aim for first and see if you can stay in the spectrum of compliance, and that is to try to bifurcate the services from the service center or the trafficking business. Now, when I say trafficking business, I'm talking about service centers. So I use trafficking when I'm talking about the service center, and I use the service business when I'm talking about everything else, facilitating, management, yoga, anything that we can consider not trafficking. So if you look at the definition of what is trafficking, you've got the manufacturing, you've got the distribution, you've got the transport, or the intent to do any of those three. I think it would be very hard for the IRS to come in and say that facilitation is trafficking, because in my mind, facilitation is about as similar as me providing accounting services. It's a service that you're providing for the service center and their clients, or you're providing you're kind of caregiving or watching or helping them. I forget what the technical term that facilitators are doing, but essentially they are assisting in the session to make sure that we keep people out of trouble. We're doing the proper paperwork, we're supervising the session, and we're there for them in case they need anything. And I think that there's a very strong argument to that can be very much considered a separate service, let alone all the other services that might be able to be provided to that same clientele. And for that reason, you would want to set up two entities. You would want to have a trafficking entity for the service center, which would essentially include the upkeep of the requirements of the facility. You would have an area that maintains the inventory and the actual purchase of the psilocybin, and also the delivery of the psilocybin to the patient or to the client. And then on the other hand, you would have a facilitator, a facilitation service, which could even cross over a little bit into the compliance, but you have to be careful if you're going to do this. Again, there's a spectrum of compliance. They really both need to operate as independent, profitable businesses. And I think it can work that way. And one of the benefits for doing it this way is that right now you can get banking. Like, I bet if you're a psilocybin service center, you probably can go to the bank and get a bank account, depending on who you talk to, because they have not yet been instructed to not give you a bank account. At some point, they will shut it down, or once they get word that Oregon says shut those bank accounts down, or their bosses say shut it down. But I think you can go to credit union right now and probably get a bank account for a service center. Eventually, that won't happen anymore. You won't be able to do that unless somehow psilocybin gets into the Safe Banking Act or something like that. That's coming through for cannabis, which I don't think that's going to happen. So right now, that your service business can get banking, but your service center probably can't get banking, except for a small window, because people don't know this is coming, right? So, and then that will allow you to conduct business like a regular business from the service business side of things, and deduct all of your expenses just like your regular and ordinary business. And the trafficking business, you still can now elect to use 471C as an inventoriable calculation. You can still base your inventory calculation on the books and records of your service center, your trafficking business, and you can still write off almost everything. Very little actually ends up not being able to be deducted, because 471C has given us the liberty of that. And it is very much defensible. And I'm hearing from my colleagues in the cannabis space that there have been multiple audits around 471C now, and they're not making adjustments, meaning they're condoning the methodology. And it's been seen as aggressive and not defensible, but the proof is in the pudding, and it is aggressive, but it is defensible. And so you're gonna have those two camps. There's gonna be a camp that says bifurcate, but don't use 471C. And then there's gonna be the other camp that says don't bifurcate, just use 471C. And both methods work. It's just that you bifurcate and you use 471C. You get the best of both worlds there. So the thing that you need to know about bifurcating, though, having two separate businesses, is it's important that they operate as much as possible as two separate businesses. And there is what I'm calling a spectrum of compliance. And on the minimal side of it, you need to keep separate QuickBooks files, separate ledgers, meaning maybe the service business has bookkeeping, like or a bank, and you track in QuickBooks. You sync your bank account with the QuickBooks, and you do your data entry with it. And then on the trafficking side of things, you have a cash ledger, because a lot of what you're going to be doing is in cash, and there needs to be a safe, and there needs to be some cash management and that kind of thing. That's minimum. Okay, the next thing you want to do is you want to avoid, but it's not necessarily absolutely required, that you don't mix admin. You don't mix the admin. Like, the trafficking business pays for its own license. The work is ideally done by its own personnel, or at least there's somebody who is being paid specifically to work the trafficking business. And then the services side of it is paying its own payroll and doing its own thing. And again, like, I don't want to get too far off in the weeds, about exactly how to do those things, but we can be creative with it to get to the same end result. And because the service center has banking and the trafficking business doesn't, you will be probably compelled to pay a lot of the trafficking business's expenses with the service business's bank account. Now, that is okay. It should be kept very minimally. And there's a very specific way to record those transactions in each of the business's bookkeeping in order to make sure that that appears like they're completely separate. What you don't want to be doing is deducting the trafficking company's expenses on the service business's books. That's what we don't want to be doing. You are legally allowed to loan money to the trafficking business from the service business if you need to, so that the trafficking business can pay its own expenses. And you can potentially just pay those expenses and then show it as a loan from the service business. So that's like kind of minimal, those are like minimal bookkeeping things that might happen that we want to keep to a minimum, and I expect them to happen. But the more of that happens, the more risk you put yourself at in terms of the IRS coming back and saying that those aren't two separate businesses, those are just one business. And if they do that, then they will apply 280E to the whole thing. So, and then I see that you have your hand up, but I want to finish what I'm saying, and then we'll just like go into open conversation. So the linchpin, though, and this is where I really wanted to get to, is the linchpin is if you can somehow show substantively different ownership. So I was just talking to a gal that has a key employee where they're going to work out a deal that he owns the facilitating business or the service business, and she owns the service center and the license. And I was like, beautiful. And we were looking at a P&L like that she did in Excel. And she's like, this is the service center's budget, and this is the services business. This is the facilitator's budget. This is what we would need to charge for each of them. And the customer has to pay both. They're going to pay the trafficking business for the psilocybin and some facility costs. And then, so one transaction, one invoice, 2 line items. We don't report that to the IRS. As far as they know, it's just all sales of psilocybin on the trafficking business. And then on the service side of it, the client or the customer pays for the facilitation services, the paperwork and the supervision. And it seemed beautiful to me. It works. It works because even though she really owns the whole thing, they've got 2 businesses. She entirely profits from the service center, and then it's like even though he owns the facilitation business, it's going to be a profitable business, but a lot of the money goes through the service center to pay the facilitators and the facilitation services. So that is all kind of a work in progress. But if you can't do those things, and I'm just saying, like, you don't necessarily have to have a different ownership, but if you can't even keep separate books and records, or you can't keep track of what business is paying what expenses, just don't do it. That will put you more at risk than if you just put everything under one umbrella. Okay, that's really what that was almost the main point that I wanted to make the whole time. So with that said, I've said pretty much everything I want to say. So Jesse, you had a question. Oh no.
I appreciate it. I was going to get into a technicality of 471, but I'm kind of over it. So like, I'll let others talk.
Yeah. Okay, Dan, you've got a question.
Yeah, so this issue of ownership and separate ownership, I think, is before you even said it, that's what I wanted to talk about. Um, that was the focal point of Nick Richards' talk, several weeks ago, and I don't completely understand it, but here's our situation. We are husband and wife. We are both psychologists. We're both in training programs right now. Um, we own a building through an LLC that we want to, in part use for a service center. So I mean, in so many ways, we're attached, we're connected. So how in the world are we going to create the impression of a separation when we're connected in all of these ways, and how vulnerable, is that going to be?
Yeah. Well, last time Jesse and I talked a little bit just recently, like 2 days ago or something like that. And we were talking about how the more services you can put into like a service part of your business, the more it does act as if that business is providing services and not necessarily alive and well for only the intention of selling psilocybin.
Mhm.
So I don't know if it's completely legal for you to take like your and I have a little bit of reservation, but if you were to take your current business and use that to provide facilitator services. Now I know you can't cross over licenses, so you have to be careful there. You can't use your license while you're a facilitator, but
Right.
and this is part of the conversation part of this meeting, right? Because if you can correct me, please do.
Yeah.
But you could potentially just write those facilitator costs off on your current profitable business, because you are providing a service for for the trafficking business, or the mutual clients of the trafficking business. And then you keep the trafficking siloed under a C corporation or something like that. My only reservation with that method is if they want to crucify you, they might come in and be like, offering facilitation service. You're actually just selling drugs and you're laundering, and abating and abetting these drug sales, and they're just going to take you down, something like that. That is one thing I wanted to say, though, is I've never seen that in real life. Like I've never seen an audit happen where there was just somebody out there just to crucify somebody like that. And I've represented a lot of people over the years, and usually the auditors, like when they find out that maybe it's in the cannabis industry or the psilocybin industry or whatever, it's a surprise to them. They're like, oh. And then we as accountants are actually more educated about the rules, the ins and outs of it than they are. And they just want to get through it and do their job. They're not out to try to crucify you. I'm not saying that there aren't going to be auditors out there. I find that there are some people who are like power tripping, and they may want to make you an example for their resume or whatever. But I've never seen that in real life, as far as like how it works with the IRS. The IRS typically will just say like, hey, they'll send somebody a project. They'll be like, audit this guy. They go in and then of course you hire someone like us and we sign an engagement. And then I say, what's up? And they're like, send us your books and records for this business. And then they're really just wanting to make sure you're not ripping them off, that you're paying your taxes. Now with 280E, they will just go straight for the jugular, and they'll see, ooh, this is a 280E business. How can I screw, or I mean, they actually don't do that. They don't actually come in and say like, how can I screw them over? They don't. But they definitely will pounce on it if they can, because nothing else works. So the few audits that I have dealt with in the cannabis industry, which have been only a couple over the last many years that I've been doing this, and they just wanted to get through it, and there wasn't any discrepancies in books and records. They could not find anything wrong with the books, but because it was 280E, they were like, because the IRS said in this regulation that 280E was disallowed, or 471 was disallowed, then we're going to get you on that. But you know, that's going to get settled in appeals, and so it'll be a done deal. But going to tax court is like very, very rare. I don't know where I was going with that. I'm just saying that they're not going to. I don't think that they're going to be predators.
Okay.
Can I make a comment?
Yeah, Jesse, go for it.
So Dan, regarding the common ownership, like, so it seems to me like with all this stuff, there's like layers that we can add, and each layer you add can provide better protection. So like separate ownership would be better, right? All these different things, you can do lots of different things. But no one thing makes it like, no one thing is a magic bullet. No one thing makes it black. No one thing makes it black and white. So with separate ownership, like my personal opinion is that I think like, yeah, sure, it technically could be better. I don't think it's necessary though. I mean, Champ showed us that. Like Champ showed us all under one, this was just one business entity, not even two business entities with common ownership. It was one business entity. And they divided up lines of business, and they said, okay, we're only going to apply 280E to this one line of business that you have, not to the rest of your business, right? So you could even have, I think technically, you could even have one business entity that had two lines of business. One is, as Justin puts it, the trafficking business. I like to call it the product business, but so that's right. And then the other line of business is the service business. You can have it all under one business entity. But again, with these layers of protection, I agree, two business entities is another layer that makes it better. And then different ownership could be even another layer. But like, it's like, I think from the IRS perspective, it's not like having different business entities is in itself a magic bullet, right? Because they, you know, it's easy to set up, get a new EIN, right? You could have one business, and for some reason you could decide you want to split up your one business into 20 different LLCs or 20 different corporations, like, and the IRS is going to kind of try to zoom out and look at it and what's the real situation. So if you had these two different business entities, but one of them is like losing a ton of money every year and the other one is infusing money into that one every year, they're going to be like, I don't care, it's two different business entities, that's all one business, right? And so I think I agree, two business entities is better, but I think what's more important if we want to do this approach is to make each line of business look like its own business, which I think Justin mentioned earlier, which means like you can't have the product business losing a ton of money every year, which is being infused by the service business. You have to make each one at least sort of roughly break even or profitable.
They both need to be profitable. They need to be both profitable businesses. And with a little bit of budgeting, you could make that happen by pricing out the sale of psilocybin, the facility use, as well as the service side of things. Then you should be able to show multiple. Now you just got unmuted, Heidi. I think you were trying to say something and then.
No, I raised my hand. I was waiting to get called on. I'm a good student.
Oh, okay. Yeah. I wanted to add something about the Champs though thing that Jesse just said. See, that was a little bit of a different animal. And that's why, like, I think having two separate entities is still also a good idea, because Champs was providing two unrelated services. The caregiving actually was in itself its own, like, it could be a standalone service easy. Whereas facilitation is pretty connected, because the facilitation wouldn't exist without the sale of psilocybin. So that's why having two businesses, actually having a little bit of more of a layer of protection, that adds a little bit more of a layer of protection. Heidi,
and just 30 more seconds, and then Heidi. And another great reason to have two business entities is that since there's no banking for psilocybin businesses right now, having two entities means that, yes, your product business, which will be the smaller of the two businesses by dollars, will be a cash business, but your services business can have normal banking, normal payment processing. People can pay online for things, you know, so that's sort of another good reason to have two entities, and what Justin said. Okay.
So for the product business to be profitable, then we have to figure out what their expenses are going to be and set the price accordingly, right?
That's right. That's right. And you can frame that to the customer if you want. Like, if you want to be transparent to the customer, you could even be like, hey, here's what we pay to the manufacturer for this product. And here's a portion that we have to sort of add for like service center usage fee element of the psilocybin product price. So you can be transparent in that way. But when we talk to the IRS, we're going to be like, this was all the price of the psilocybin product.
Right,
you know?
exactly. Heidi, go for it.
Yeah, I've got a couple questions.
Yeah.
First is, you know, we're likely to be licensed really soon, and we need to figure this out. So it's feeling a lot more, I don't know. I feel like this, I've got to figure this out. Where does the licensee representative payroll and the backup facilitator cost go in your bifurcation model?
Mm-hmm. So your facilitation, you said backup facility. Let me start with the first
we're
one.
required to have a licensee representative on site for the whole time anybody's having a experience, and we're required to have a backup facilitator within a reasonable time.
Yeah.
Those are both costs of the journey, but they're also, the licensee representative is the person who sells the product and has to, we understand now, has to watch that person take that product.
Yeah.
And
that's a facilitator that watches that person take.
No, the licensee representative, this is what we learned in our site visit, was the licensee representative is supposed to watch and make sure it's all taken and take away any leftover product and put it in the old compost.
And does that have to be two people, or is it one person?
Yes, does it have to be two people? I do believe the backup facilitator has to be separate, right, Jesse?
Well, yeah. And I mean, so like, and you don't, I mean, I guess I don't know if everybody's going to be paying their backup facilitator, or some people might just have like friendly arrangements where you have somebody on call that the assumption is that's not normally going to be used. I think in sort of thinking that I've been doing with people I've been working with, we're not counting that as a big cost, but you do have, or any cost. But the rule is you have to have one person who's a service center representative who sells and handles the psilocybin. And that person can on a different day be a facilitator, or even later in that day be a facilitator. But for that session, it cannot be the facilitator for that session. The person who handles the psilocybin, sells the psilocybin, watches the person take the psilocybin is different than the facilitator for that session. And so,
can that person be the backup facilitator though?
No.
Okay.
Oh, that's what you're asking. Yeah, that's a great question. I guess I thought the answer is no, but now I'm like, I don't know if I should just check the rules out. That would be an interesting little loophole if that was allowable. I never really thought about it. I'm going to go check. That's a good question.
I don't think facilitators will work for what we can get a licensee representative to work for. You know,
I mean, like, so licensee representatives are low cost.
Yeah, they're like a customer service person. So they're like $25, $30
and they just have to show up, right? And like they
have to be there for the whole session. They have to be there for the whole session. Yeah.
And so I think in terms of how we allocate that cost, what I'm hoping, because like basically the goal, I think, if we're doing this bifurcation, is to keep the product business small, because the product business is all cash, right? And the product business doesn't have banking. And so the customer has to come up with cash for that portion. So the more cost we put into the product business, the more we have to increase the effective cost of the product in order for that business to break even, the more it's a cash business. So if we want to minimize it, I'm hoping we can say, okay, that service center rep who's sitting there the whole time, we're going to allocate some portion of their cost to the product business, but we're also going to say while they're sitting there, they're doing work for the service business too. So I'm hoping the service business can actually partially pay them, because they're actually, yes, according to the OHA, they need to be there. But when we're talking to the IRS, we say to the IRS, that person is being paid by both businesses because they're actually doing work for the service business to coordinate things while they're sitting there. They can be coordinating scheduling for the service business or doing other things for the service business. So I'm hoping we can allocate some portion of them to the service business, again, to keep the product business smaller.
Yeah, I think we're gonna have to do some budgeting, and we're gonna need to be like, okay, what are our expenses for each of these businesses? And I was doing a little bit of that today with another person who's getting a license, and I think it's very much doable to where you can price in the cost of the psilocybin, these various like administrative costs too. What we do want to do though is we do want to minimize that. We can do it if we have to, but we do kind of want to minimize the crossover of like one business paying for this person and then the other business paying for the same person. Ideally, it has like there's a service center representative that just works full time for the service center, assuming you're full time or part time, and then there's the facilitation. And that's different. I mean, that to me is ideal, but it's not always reasonable. So if the service center needs to sublet a facilitator or somebody from the facilitation service or vice versa, then so be it. But again, that falls on that spectrum of compliance that I was telling you about. If you can't keep any kind of separation going on, and I mean, it's not going to be easy for you to like track that stuff and try to make it as separate as possible, then maybe a two entity business isn't the best for you. But I would say that I think that there's reasonable ways of doing this. And this is something I also said this morning that she brought up. I answered a question, is that we can do a lot of this after the fact, because as long as we're like starting on the bookkeeping now and getting our ducks in a row, and you've got one bank account, but maybe some of the money coming out of that bank account and the service business is going to the trafficking business, we can actually kind of clean it up and get it like polished before we file. All we have to make sure we do is before we file a tax return, because the IRS isn't going to bug you until after we start filing tax returns, and then probably a year or two after that. So you're in the green for like several years, and as long as we're like getting our shit together and figuring it out now and as soon as possible, we have until we need to file taxes to really figure, to get it nice and buttoned up.
So this isn't urgent in terms of taxes, but I feel like it's urgent in terms of figuring out our pricing. So, that's where this becomes urgent for me. I do have a couple other questions. One is, I'd really like us to have a unified chart of accounts that anybody who's in this group could be using. That would be a request from me, Justin. I do have a chart of accounts that I got from a cannabis accountant, and I haven't looked at it because I don't understand that stuff. So my other question is, in the Emerge Law HAF webinar, they talked about this idea of paying the client pays the service center for the use of the facility and the product, and they pay the facilitator for the harm reduction services.
Yes.
And we like that business. We really like that business model because it feels pretty simple to me. And what I'm hearing now is that the rental of the room, the rental of the service center could be part of the product cost, and that makes it go into cost of goods sold. More cleanly. Is that right?
That's my perspective too, and I don't know if I picked that. I'm pretty sure I independently came up with the same idea as Emerge, so I think that is pretty sound to like have those two things embedded within the sale of the psilocybin. Now on the invoice that you give to your customer, it could be broken out. You could say this is the sale of psilocybin, and this is the sale of the service or the facility or the cost of the use of the facility. But all the IRS sees is sales or income. We don't need to share with them that we broke that out. But that's what you have to kind of do. Is what you want to do is take your regular business plan. You're gonna have all of your expenses for both businesses in this one like chart of accounts, in this one projection, and then you're going to come up with how much do I need for each client, and come up with your price that way, and then break them out, and that will allow you to try to figure out what does this client have to pay the service center, and what do they have to pay the service?
Yeah, so in this model, we really want all of the service center costs in that, on that invoice. We want, 100% of service center costs, including the licensee representative and the backup facilitator, if you have to pay for that.
That to me is ideal, but I think Jesse and I just had that same very conversation like a few days ago, and he was kind of expressing some concerns about how that might be difficult in terms of being able to collect that kind of money from the client and showing that it's both a profitable business. But from my perspective, it all costs the same no matter what you do. And the customer is going to pay the same amount. We just have to do it in a way that both the service business and the trafficking service center can be profitable.
Well, we like that idea, being profitable. So the other thing that this changes for me in your model is that each facilitator has their own business. So each facilitator is their, I'm not facilitation business, Heidi Venture, for all of the facilitators in our office. They each have to collect their own money, have their own bank account. I'll have to have a separate bank account for facilitating. Are there any problems with that you or Jesse, we'll bring Jesse in here too, would see?
Yeah, I think if they're properly informed, the facilitators are properly informed. And I just did a little presentation for the
Synaptic.
Okay, then if they understand what it means to be self-employed, and they agree, and everybody agrees that those people are independent contractors and self-employed, and there's not a lot of like control imposed by the service provider or the trafficking business, it can be considered independent contractors and have their own businesses. And they definitely would not be trafficking.
Yeah, and we're not paying them as independent contractors, so we don't have to do the is it 1099, 990, right?
1099.
1099. So we don't have to send them that because we haven't given them any money.
If the customer pays them directly, then that is not an expense to the trafficking business. That's between
right. So nobody has a non-deductible expense in this model, and I like that a lot. Dan? And I don't like having to treat them as independent contractors and give them, the documentation.
Well, yeah, like you're receiving the money and then you have to pay out the facility. You pay the.
No, I don't want to pay the facilitators.
I know. I'm just saying that's like maybe a more traditional approach.
Right.
Dan, you got your.
Okay.
Yeah. Related to that, I would like to have some better understanding of just how much control the service center can have over contractors, and where is that line where it becomes too much and now it's not defensible anymore.
Yeah, I think that if you've got one good employee, either better yourself or a hired person that works for the service center as like an administrator to do that, or you hire somebody to do that, like a third-party service or something like that. But the facilitators, I think I think you can kind of treat them a little bit like a spa treats a massage therapist, but instead of the spa receiving the money, you just have the client pay them directly, because you're not training them how to do their job. Like these are the things that make them, where they cross over to being an employee. If you're dictating their hours, you're keeping them from getting other clients who they can work for at the same time. You're training them. Did I already say that one? Dictating hours. So those are like the three main ones. There's a few other ones, but you just you can't treat them like employees. Like not their boss.
So I mean, clearly we're going to have policies and procedures in our service center, and people will have to abide by those policies and procedures. Is that considered micromanaging that could threaten that relationship?
No.
Okay.
No, I don't think so. It's more a matter of like if you're training them to do their job. And if you give them a manual and you're like, this is how we do it here, as long as they're like they have an LLC too, they have their own business and they understand what it means to be self-employed, then you have a little bit of flexibility there. You may want to contract, like an independent contractor contract to sign. They understand that they're independent contractors and their rights. Right? What you expect and what they expect of you. You put those three things in there and you've got a pretty good deal. And especially if the customer is paying them directly. That's a huge thing. That's a huge difference.
So I want to just respond to one of Heidi's questions before when you said, like, would you show everything to the customer in terms of the service center product cost? And I think, I think what Justin was mentioning is like, there's a little maybe kind of discussion of like, how much of the service center representative cost do you put in the product business? How much of the rent of the service center do you put in the product business versus maybe allocating some of that to the service business? But whatever you come up with there, whatever you report. So the more you put into the product business, the more you have to charge for the product in order to make it actually a break-even business. And so whatever you charge and whatever you're telling the IRS you charge, you have to show that the customer has to pay that, and they'll have to pay that in cash to the product business. So there's some like discussion of like, how much expenses do you want to put in the product business versus the service, but whatever you do put in the product business, you have to account for that by the price of the product. That's one thing I want to say. And then the other thing, Heidi, is like you were saying about having clients pay each of these individual facilitators. You can do that, or you could, if you want, have a service business and you pay the facilitators as contractors through that. And if you look at this inner guidance services, which is one of the ones that got licensed recently, what they're saying on their website, I've been working a lot with Epic Healing Eugene, but I haven't been in touch with inner guidance. But if you look at their website, they talk about inner guidance is the service center, but then the services, the facilitation services, will be provided either by their partner services company, which they call LifeTrek LLC, or it could be by independent facilitators. So they're kind of allowing for both. So they have a partner services company, LifeTrek, and you can go services through them, or if you want to sort of bring in your own facilitator, you can do that too. Okay, that's what I was just saying. Yep.
I think the overall gist that I think you can take away from this meeting is that you have options. and you can go like, well, ideally we would be doing it this way. And then how can we make it now work for you how can we make it the most defensible for you in terms of dealing with this pesky issue? And I think, Heidi, you landed on a great idea. I don't know why it didn't occur to me to just be like, hey, just operate a service center and have the customer pay for the facilitation, because almost everything else we could potentially put into the 471c inventory calculation, because it really was like the facilitator cost that there's other services too. Like I was talking to somebody who wants to just do a service center just for microdosing, right? So people come in and there's a lot of entertainment that could happen here while microdosing. And that's a little bit of a different animal. Like, will that hold up under 471c if we just lump that all together? Probably not. Like, I mean, that's one of those things that it's like, no, that's meditation is meditation and there's value there. You don't just get to add that to inventory. That doesn't make any sense. So in that way, that doesn't really make sense. But I think facilitators, if it's just facilitation, you might be able to just keep it under one umbrella, but I think there's options in terms of doing separation too, separating the businesses out. Thank you guys. That was like a perfect 1 hour. Should we wrap it up? Do you guys have any other questions?
I would like to talk to you, Justin, after everybody leaves.
Okay.
And we did have a question from Jason in the chat about manufacturers and what they're charging. I've talked to all three. Well, I've talked to 2 of the manufacturers, and the numbers I'm getting from them are very confusing, because one of them is going by milligrams of analyte. And when I figured out what he was doing, it'd be like $500 for a journey. So I'm really not sure what the manufacturers are up to, but I promise I will report to the whole group when I find more information.
So I can tell it's about $5 a milligram is what I've seen, which, like, if you do, I think a typical person would probably do something like 20 milligrams. So that means it's about $100. If you want to max it out and do 50 milligrams, that's $250. That's a big dose. That's roughly equivalent to like 8 grams of dried mushrooms. And so it's definitely more expensive than like underground prices, no question about it.
Way more. Yeah.
Right. And that's even before, if we do this business bifurcation, you're going to have to put another markup on top of that. But you can call it, like we said, you can call it like a service center usage element.
You're going to have to mark it up. It's going to have to be like at least 50% plus markup, right?
Yeah.
Could you repeat that, Jesse? You said $5 a milligram, and then could you say it's $5 a milligram? How much a typical dose is, and how much that's going to equate to?
Sure.
Oh, look, Brandon's going to jump in. He's a manufacturer. We're going to hear the real goods here. Take us to the school, Brandon.
Well,
I just came here to laugh about how ridiculously high that number is. That is probably what they're going to be charging, but that is nowhere near as reasonable as it should be. But anyways,
but I think we as an industry, honestly, I think we as an industry need to be able to talk straight to people about this and not sort of say that these are ridiculous prices. These are the prices that are required in order to do it legally. And so if people, in my opinion, if people want to go underground, I have no moral objection to that. That's a way to do this more inexpensively. But if you do want to do it in the state license system, there's definitely extra cost. And this is what the costs are, and it's just, there's no getting around that. We just have to be able to be unashamed of that, I think. Yeah.
And it was going to be about $30,000 for me to do the manufacturing this year, which, I mean, if no one's really even starting this until, September, it just made no sense to even look at that fee right now.
But I think Jason was asking me to repeat what I said, which was just simply $5 per milligram. And so if you do like, I think that like 20 milligrams might be about equivalent to 3.5 grams of dried mushrooms. And that would be $100. And if you wanted to do the maximum allowable dose of 50 milligrams, which would be what that would be like 8 or 9 grams of dried mushrooms, then that would be $250. Right. So that's Jason. Does that answer your question, Jason? I'll assume so.
Yeah, I wouldn't. I mean,
thank you. I was just gonna
go for it. Sorry.
Yeah, thank you. That did. I mean, I'm just trying to figure out, that's how many people are we expecting to do this? Because I'm approved for a manufacturing license. I just can't. I'm just running numbers of how I want to have a service center and manufacturing on the property here, but the numbers of that. I mean, the license is $10,000. That's 8 journeys to break even point is 8 journeys a month at $100. You know, that's 2 a week, two people. So I'm just wondering, yeah, I don't know. I'm just trying to figure it out mentally, wrap my head around the numbers. Thank you. That was great.
Sure.
I would say that, I mean, first of all, like for the service centers, like the price, I wouldn't be too concerned about the price because there's probably a ton of people that would appreciate it going into sessions legally. Like myself,
Absolutely.
I have no me time. You know, I have no me space, no me time, right? But you guys offer that to me. I don't know anybody selling mushrooms anymore. I used to, but I don't anymore. And I'm not going to go take mushrooms around my kids, you know, and my family, and they're always there. They're always there. So I would, and now I'm privileged. I'm pretty privileged owning an accounting firm and whatnot, so I can afford that. And I would love the opportunity to go to a few of these places once they're up and running and have a proper guided experience. And so I think there's a ton of people like me who are out there. So I don't think you're going to have a problem, you know, finding people. I want to caution manufacturers though, because from my understanding, it's fairly inexpensive to grow a lot of mushrooms. It's expensive it's hard to get into, but once you're into it, you can grow a lot for very little. And if there's 100 manufacturers to 100 service centers, it's going to be a problem. It's almost like there needs to be one manufacturer for every 20 service centers, something like that, like 10 to 20, right? So I would just caution the manufacturers, if you're going to do it, get in fast and don't mark up your products too much to make yourself the most attractive you can, and establish those relationships with the service centers quickly.
Yep. Right now there are 24 people applying for a license for manufacturing. 24. That's a lot. It's way more than we need.
I'm sure there will be gray market stuff, black market stuff coming, like the cannabis industry. But I fear for the manufacturers that they might follow in the footsteps of cannabis, which is like a race to the bottom and then out of business. And just for your information, as far as like the cannabis people who have been successful are the people who have made those relationships with those dispensaries quickly and are able to provide a consistent product, and they never run out. And they give them a good deal because they know when the price keeps going down, you're like, hey, I'm going to give you a good deal now, even though the price might be this now. I'm pricing it at this because you're my person, right? And we're gonna work together for a long time. So just a thought for the manufacturers.
Yeah, I would say, we are in the cannabis industry, and when we utilize the micro tier approach, we hold the smallest license, and I think that this industry could learn a lot from that, and just keeping small and not trying to take over the entire industry. If you ask every cannabis farmer 10 years or in 2017, every single one of them over the industry, which is there can only be one biggest, and this is, it's a tough thing to do. So I hope everybody stays small and doesn't expand beyond their means to crumble under their own pressure.
Yeah. Well, I've heard a lot of people like, tell me about hiring. And I'm like, what are you talking about hiring? Why are you hiring somebody to grow mushrooms for you? Like, you don't need anybody. Like you're too far ahead of yourself. You know, like you just got to keep it small. Jason, you go to the co-op meetings occasionally, right? Because I recognize your name.
Yes, I actually met you, and I'm actually trying to have you help with my taxes with this and with our cannabis farm. So we do need to talk soon.
Right on. All right. So Heidi had some questions for me. I need to get back. I need to get running here pretty soon. So I'm going to sign off. And then Jesse, I direct messaged you a question. I don't know if you want to get back to me on that in Discord. Just about, yeah.
Okay. Do we need to address it? Should I look and address it now, or this is for later?
No, just later.
Okay, sounds good. And everybody, just to say, I'm going to send a write-up and spreadsheet to Heidi which describes the bifurcation approach. And if anybody wants to get in touch, I put my email in the chat.
Yep. And I'll send that out. And if it's okay with Justin, I'll send your little cheat sheet out.
Oh yeah, no, I
thing.
definitely want that.
If you get this recording put on YouTube, I can send the link to that too.
Cool, thank you. Awesome.
Oh.
Okay.
Okay, bye
Bye,
everybody.
everyone. Have a good day.
Okay, give me a minute here. I am making sure I do have Jason on my list. I didn't think I had him on my list, but he's there. So, can you stop recording so we can just talk about
Oh yeah,